Hey, Tech Talk, Jim Malone here, coming to you live on Dallas Trading Floor. It is Tuesday, and market's off a bit today. I got stopped out of one of my positions in Tesla. Couldn't believe it. Got stopped out, and thought I was going to pick up some Facebook. That went down, and fortunately, I sold a call, so hopefully that'll soften the blow a little bit. Even my low price portfolio is down a little bit today. So, oh well, you can't win them all, but we're off a bit today. But hey, hopefully we'll be moving higher in the rest of the week, but definitely not today. It looks like there's some profit taking going on out there. And we seem to be down a little bit. So just kind of want to show you the general direction of the market. And by the way, for everyone looking on TikTok, we do broadcast live. We just broadcast these charts on Facebook at facebook.com/Dallas Trading Floor. And it is August. So I just kind of want to show you we're still in an uptrend. We are still in an uptrend, which is a good thing. So we seem to have backed off a little bit. Who knows what's going on? But I was told that even though Tesla is doing very well in China, they didn't quite make as money as that they thought they were. So that seems to have moved down a little bit. So I sold my position, and I'm waiting for hopefully the next uptick. But for right now, I'm not in Tesla. It's been a while since that's been the case. As you can see on the S&P, on the Spider, we are down a little bit today at 334. It's still pretty good. $1.56, or almost about 0.5% down. Volume is fairly light. Actually, the volume is sort of light, which is kind of odd, but that is indeed the case. On the QQQ, we are down too, and this is really where it seems like there's some profit taking going on, because I'm seeing these red bars here, which means people are taking their money and running. So maybe some of the big funds are taking a little bit out of the market, but the volume is still light. So I don't think this is an overall change in the direction of the market, because we don't have heavy volume, but it just seems like it's kind of an off day today. I wanted to kind of show you my portfolio. I was so proud of this morning. We were up, we were green in all three areas, but we are not right now. We are off a slight tad, 0.3% and 0.2%, but we're still doing okay. We're still up in terms of the overall cash, but we've moved down a little bit. Sorrento Therapeutics being the one that kind of moved down a little bit. It moved down a little bit, but hopefully it will be moving up again. If not, I will be getting rid of it. So that is the way there. By the way, our low cost portfolio is available to subscribers by going to DallasTradingFloor.com, and then we have a little link that allows you to sign up for that. We're putting that up right now. Don't have it up right away, but if you want to get the free trade alerts, DallasTradingFloor.com, and just type it into the subscribe, and it's totally free, of course. Now, for people that are watching on TikTok, very easy to get the same thing. Just go to my profile, hit the link, and you'll be taken right to the sign-up page. So there you go. And basically, this is what I did yesterday. I went in a full position on SRNE and another full position on PFS Web. And I'm waiting. I was actually waiting on something to report, but hopefully I'll have something for you tomorrow. I did remove United Micro. It just wasn't going anywhere. So that's kind of what I did there, yesterday. So that kind of gives you an idea. This is where we're at. We're at YouTube, TikTok, Periscope, Twitch, and Facebook pages. So we're all on those places right now. So let's get to it. We have a first question. Thank you. All right. What's the story with Teladoc? Well, I don't know. The story with Teladoc is I'm actually sold out of Teladoc. So I am in a little bit probably in a different space, but I think it's probably off today. So let's take a look at TDOC. I think it's in a great space, but it seems to have been selling off. So yeah, there you go. It's at $9. Ouch. Okay, we have a buy signal. We have a sell signal here, unfortunately. Basically, here's the deal, Arnold. Sorry to inform you with this. I hate this, but we have a definite sell signal on this one. So it's probably time to vamoose, get out of Dodge with Teladoc, because it's broken the 40-day average, and it's up on the sell volume. So it looks as if it is not making the right way. You can tell this basically when this happens, because the volume is up and we have broken through the 40-day moving average. So I think we are in a sell. If you are down, definitely sell. If you're down, if you're down more than 8%, and consider selling even if you aren't, because it doesn't look like it's going to be that pretty. So, oh well. You have to take the good with the bad. FedEx, FDX. Let's look at FedEx. FDX. Real quick. FedEx. FedEx should be doing good, but no. It is a down day on Wall Street today. Man. Yeah, it tried to make a move, and then it kind of petered out. So I want to show you the chart here. This is the daily chart on it, but it looks like we're off. Yeah, it's definitely a pullback, and it looks like on heavy volume. Yeah, there's definitely big selling going on here. Let's see if I can get you a little bit better chart than that. Kind of with the sell. Let's see if I can get an annotated chart for you there, so that we can see kind of what the deal is with FedEx. One of my favorite tools, actually, one of my favorite stocks. I do like FedEx, but today it's just a tough day. I mean, it's just a tough day. So let's look at that chart again. The thing about the chart here is that it's definitely an uptrend. There's no question about it. It's really not back to where it was in December, but it's definitely making the right kind of move. It basically, earnings are in 15 days. So I don't know if you're in the stock, I think you might want to consider, finding a good place to sell it right before earnings. That's about in 15 days. So that's the thing I would recommend in this kind of a market. It seems like there's a little bit of a market change I've noticed today. We are moving a little bit sideways here. We're not going up quite as fast. There seems to be a lot of profit taking going on. And it looks as if that's the case here. So recommend on Facebook, on FedEx. If you're not in FedEx, probably watch list it, don't get in it. If you're in it, you might want to consider exiting prior to earnings in about 15 days. So that's kind of, my take on it. My take on it for this anyways. So that's kind of where I'm at on this. Opinion on Apple. Buy before the split or after. Well, you know what? I bought a bunch of Apple today. I bought another 100 shares, believe it or not. I still think Apple is good before the split, but I could be wrong. It's pulled down a little bit. So let's look at that. Yeah, it's off $6. So, but I do think it's going to move higher right before the split. That's typically the pattern on how it moves. Again, I bought 100 shares today, thinking, on the pullback. So hopefully I was right. I was right about that. But I do think that it's gonna move higher into the split, which is of course on the 27th. That's the day before the split, and of course it will split. And when you wake up on the 31st, magically you will have 4 shares for every one that you already had. So if you have 25, you'll have 100. If you have 100, you'll have 400. So I'm still very bullish on Apple, because I do think they sort of have a money printing press somewhere in Cupertino that they're running. So I do think Apple is still really good, and I'm putting my money where my mouth is. I have currently 250 shares of Apple. So hopefully Hopefully I'm right. If I'm wrong, well, maybe I'm going to be driving a Hyundai and not a Tesla. So I still think that the best time to buy it is right on the run up before the split. I do think it's going to reach its peak on the 27th, right before it splits 4-for-1. So it is my intention. I have a sold an option already. It's my intention to sell probably at least half of my position before it splits, and that is kind of where I'm at. I'm probably going to keep 100 or 200 of the shares, but of the split shares, but I'm probably going to sell a good portion of the rest. So that's kind of what I'm planning to do on it anyways. So let's see. What about KL? Sold a bit. Yeah, good. Okay. It's not bad. Let's look at KL. I like KL. I still think we're in a kind of a weird market right now. We can't figure out because of the election, kind of, what's going on. Are we going to have deflation? Are we going to have inflation? What are we going to have? It just doesn't appear to be that clear. So, people are going into things like KL. So let's look at KL just real quick. Here, I'm just going to look for a quote on KL. Yeah, it's down today. Just everything is down today. So it just seems to be an off day. It just seems to be an off day in the market. So, what can you do? Here we go. I mean, definitely moving to the downside. Not the way you want to see it. It's still above the 40-day moving average. But we seem to be weakening a little bit, which is interesting because this is a composite rating of 99, and typically anything with the start of typically big runs in stock are when they're 95 or better. So this is definitely in that good category. So yeah, it just is a weird day for precious metals today. I think that the deflation hawks are in there. I think we're seeing more deflation. Possibly, at least fears of deflation, and but interestingly enough, thinking that I went into Facebook today. I bought 100 shares of Facebook today, which promptly then retreated on me. But I still think that the COVID thing isn't over with, obviously, and I think that there's some issues. But this, don't buy it on a downtrend. But wait until it pops up a little bit. That was Facebook was me this morning. It moved up a little bit. I bought on that up, and then it promptly changed course and went down. So always remember to set your stop loss at 8% down from where you bought everything. So that's what I always do. But just for full disclosure, today I sold 100 shares of Tesla, and then I bought 100 shares of Apple and 100 shares of Facebook. So that was my big splurge today. That was my big splurge. So I don't kind of know what the precious metals are doing, but I want to take a quick look at KL. Just look at their chart a little bit in depth because I think it's worth looking at on the weekly chart. We're definitely moving down to a pivot. The pivot on Facebook is 44.23, and we're at 48. So we might want to watch this. I do think it's going to bounce probably at about 44, 45. And when it bounces, maybe it might be a good time to pick up some more KL. Just don't know, but I wouldn't don't buy it in a downtrend. Don't buy it on a down tick, please. I've made that mistake a whole bunch of times, and I hope that you won't make that. Don't buy it on a down tick, but if it starts moving about from 40, if it starts moving up from about 44, it kind of bounces, then I think KL might be a very good ticket because I do think that there's going to be increased demand for the gold for the yellow metal, and I know that I'm probably going to be buying some as well coming into the end of the year because I do think that we're going to see a little bit of inflation. I don't know how much, but whatever. We may see some. All right, so we have some people on TikTok. Thank you so much for looking at TikTok. On TikTok, I mean, at least we're still alive with TikTok. One of the reasons I did buy Facebook today is because of Instagram Reels. I do think it's going to be very big. I'm not on Instagram Reels yet, but I am trying to figure out how to do that right now. I'm sort of stretched when it comes to technical. I'm not the most technical guy in the world. A technical trader, but not a technical guy as much. So hopefully I'll be on Instagram Reels. I do think it's going to be really, really good. And it may push, Facebook is the company that everyone loves to hate, but they seem to keep pulling the rabbit out of the hat and making money. So you just go figure. Okay, we have a question on SNR. SNR. Let's take a look quickly at SNR. New Senior Investment Group. Ooh, what does that mean? I don't know what that means. That's kind of vague. I think, is this a blind pool? Yeah, this is a blind pool. Oh, goodness gracious. Oh, senior housing. The only problem with this business, there's going to be a lot of demand for senior housing, but the problem is with this COVID thing, I think they may have shorter stays than people think. That's terrible. I shouldn't say that. But senior housing is probably one of the few sort of bright lights in a very dim environment for real estate. Real estate is really not doing all that well right now. It's kind of amazing. It's one of the first times in my life when I think that you got to be super duper careful in real estate, because I do see falling demand in a lot of areas, especially in office. I don't know if you know this, but Amazon is trying to bid for all of the old Sears and JCPenney stores and turn them into fulfillment centers. That just kind of tells you the state of real estate, especially commercial real estate in the country. Now, I also think that a lot of the new apartments that were built are too expensive and most people can't afford them. So I don't think those are particularly good investments. The only area of real estate, commercially anyways, that I like is, believe it or not, the trailer parks, because they are rock solid, because you can't basically get a lower price of living anywhere. And I want to show you a interesting, very, very interesting real estate play that I think is well worth your looking at. This is ELS. This is the largest ETF that trades in the mobile home space, and I do think it's really good. We have a cup and not a handle yet, but I do think that this is a solid investment. 65. This is not a very sexy investment. As you can see, we moved up, and then when the downturn hit, it moved considerably lower. But I do think it's on an upward trend right now. It's above the 40-day moving average, which is very, very bullish. And I think, as long as it moves, it's not ready to buy yet. I would wait for the 50-day line to cross the 200-day line, but that is coming. The symbol on this one, and this is a watch list. This is not a buy recommendation or anything like that. This is watch list only, but I think if you want to be in the real estate space, this is an area that you could possibly look at. ELS is the symbol on that one. So kind of cool. Thoughts on Zoom? Zoom zooms up, and I hope it didn't zoom down. But a lot of the NASDAQ stocks today are kind of getting hit. And I'll show you this one. It broke the 40-day line. This is not a good sign typically. Hopefully it can recover. I just want to show you this chart really quickly on Zoom. It moved up extremely fast from this buy point here. And I think at 231, I think it's a sell at this point, just because it has changed character and it is moving lower. And another thing is they're going to face increased pressure from a lot of the other incumbent companies like Microsoft, and they're going to get into the space. Even though Zoom is a better product, they do have an issue with Chinese servers, and so I don't know. I think if you have profits in this, it's probably a good time to rip. It still has a really good relative strength. I'm a little bit concerned because it's dropped below the 40-day, and I just don't like them when they drop below the 40-day. I'm in love as long as they're above that, and then I kind of lose interest after they drop for that. So I can't really be that excited at this moment. And believe me, it's a moment to moment thing. But I don't think you want to go into Zoom, and if you have your profits, take them. I think it's probably going to trend lower. It's not going to go out of business, but it's definitely going to probably trend lower. Any airline cruise lines worth buying right now? No, 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 no. Cruise lines, let me just show you why you do not want to buy cruise lines. I hate to be so negative. It sounds like I'm a negative day, but I'm not a negative guy. I'm a very positive guy. But let me show you CCL, which is probably the best of the cruise lines, and it's wretched. I mean, this is a horrible chart, and I want to show it to you now because I think it really bears worth looking at it, because it's just not something you want to be in. And here's the chart for Carnival Cruise Lines. Look at that chart. It's going down. It's going from the upper left to the lower right. Just not something you want to buy. You just don't want to buy a chart like that. And this is the best one of the best ones. Well, I'm sorry, this is the best one. Let's see, CLCT. It says that is the best one. So let's take a look at this one. Yeah, they're up a little bit. This is Collectors Universe. What the heck is that? I can't understand why Collectors provides authentication grid. Huh? No, this is no. I am totally wrong. CCL, Carnival Cruise Lines, is not a good investment, nor is Norwegian, nor is anything else, unfortunately. CCL. Yeah, it just popped up there a little bit. This is just, I wouldn't say it's radioactive, but it's pretty darn close. This is not something you want to be in. And you really don't want to be in airlines either. Look at this chart. I'm just going to show you the chart for Carnival here. And this is really a lesson on what not to buy. As you can see, it's below the 200-day. It's below the 40-day. And it is trending. Well, it trended up a little bit. It has a relative strength of 4. That means 96% of the S&P 500 is doing better than Carnival Cruise Lines. So I think one of the ways that you could do better than Carnival Cruise Lines is not to buy it. I just don't think it's a buy. I just think it's sort of awful. So I just don't think anything. What do you think about Visa? Well, here's the thing. I think there's better opportunities than Visa, one of them being PayPal. And I want to kind of show you both. Visa, show the chart on Visa here. Visa, it's a great company, but I just don't know. It's getting a little bit of it's right below a buy point though, which is kind of thing. But it's pulled back. If it moves, Visa is buyable if it moves to right about 200, and it's right below that. So it may be in a buy point at this point. If Visa, well, Visa might be a buy. Looking at this chart, I take what I said back. This is definitely setting up very nicely for a buy. The 40-day moved above the 200-day. That's excellent. It looks like it's in a buy zone. So definitely Visa is in a buy zone from about 200 up to about 210. That's going to be your buy zone on Visa. It's just right below. It's right below. Now, I would recommend buying it after it moves above 200, not before. It's just a little bit safer. But you want to see it move above 200 on good heavy volume, and then I think you might have a winner on with Visa. Let me just take a look at another one that I really like, of course, and that's PayPal, PYPL, and see how that one's setting up. And well, guess what? I take it back. Visa is definitely a better chart than PayPal, and I haven't said that in a long time. But if you had to buy either of those two, Visa's the one to go with. It looks like Visa's the one to go with, based on the charts. So, yeah, I stand corrected. Visa definitely is a buy. That's no question, especially because it's right below a. It's right below a pivot. So there you go. It's pretty cool. Any thoughts around work? Okay. Let me see if I can get some more information on work. Right. Slack. Oh, I so want to recommend this one, but I so can't. This is not a good chart. Yeah, we've fallen below the 40-day. We're still above the 200-day, so that's pretty good. It's it's only a 51 relative strength. That means it's basically right in the middle of the pack. There's a lot of selling going on. Nope. At least for right now, you might want to put this one on the watch list, but no, this is not a time to buy work. This is not time to buy slack. It's just the chart it's not good enough right now. Wow, I've been really negative today. NCLH. This is Norwegian. Let's see. NCLH. Yeah, Norwegian. Unfortunately, just like with Carnival, this one just ain't there, man. It just ain't there. If you have this one, sell it. Please sell it, sell it, sell it. Run away. This is a very bad chart. Very, very bad chart. Let me just show you some things about why you don't want to buy this one. Well, you have a 200-day moving average, and unfortunately, it's below the 200-day moving average. And you have this 40-day moving average. It is below the 40-day moving average. Not so good. This is what they call a death cross. When the 50-day crosses the 200-day, that means you have a downward trending chart. And it did rally a little bit. The volume is definitely up. A lot of people on Robinhood like this one. I don't think this is one you want. This is a bad stock. It did rally up in the last few days, but this is based on what I'm seeing on this chart. This is going to collapse down even further, probably below $10 by the end of the year. Sorry, this is not the one you want to buy. It just isn't. Buying range on Shopify. Okay, well, Shopify is a good stock. I bought a junior stock yesterday in this area called PSF Web. It's done okay, but it's definitely not Shopify, that's for sure. Shopify is just a great company because they run. Oh, look at that. Yeah, look at that. Wow. Let me look for buying range. Really, the last pivot, I know you're going to kill me for this, but the last pivot on this was 592, and we are so extended above that. Let me show you this. If you were to buy this right now, I don't think we're in a good area to buy this one right now. It's just too far extended. It's probably going to go up from here though, because this is just a terrific chart, but there is a bit of danger in buying this one at this level. It's so far extended. I would let it create a base. It looks like it's trying to create a base at about 1,000. So we'll see what happens. But Shopify is just, again, it's got to be on everybody's watch list because it is a great stock. And the only problem is it's $900 a share, $971 a share, which is kind of expensive, even for me. That's kind of getting pricey there. Let's see, STNE. Oh, StoneCo. Okay, StoneCo. Oh, look at that. Nice. Brazilian. This is very interesting. Okay. I haven't been following this one, but I think I know a little bit about this one. StoneCo. It's a very nice chart, by the way. 52. It's a little bit extended, but this is good. It's the 40 days moved above the 200-day. That's a super sign. That's called the golden cross going up. The death cross is going down. You don't want the death cross. You want the golden cross. Looking good. There's some definite good buying there. This one isn't bad. I would wait to see another buy point. Right, the last buy point on this one was 35.87. So we are pretty far extended above that. I would watch list this one. This is a very good one. It came off of the first stage base was a cup and handle, which is excellent. It looks like it's going to make another run. So this is a watch list. The original buy point on this was about 35.15 was the original buy point on this one. It's a bit extended from that. Let it form another. Let it form another formation. Maybe a 3-week tide or something like that before it moves up. This is a good stock. This is a watch list stock. Thank you for that. This is one that I'm definitely going probably to watch list myself. I'm not really following that many Brazilian stocks, but there's some real good ones. So it's there's a lot of upside potential in South America, especially in Brazil. So, very good area to look for good stuff in. PSX, PSX, and this came from Phillips 66. Oh gosh, this is painful. I used to love Phillips 66. Driving around here in North Texas, there used to be a lot of them around there, no longer. But if you ever went up to a place called Bartlettsville, Oklahoma, that's where their headquarters were. Very, very good company. As a matter of fact, I know some people that work for Phillips 66. Unfortunately, I don't want to be an owner of Phillips 66. I like the company. I like the people. I don't like the stock. This is not a stock that you want. Yeah, the problem with the oil patch right now is just very hard to find a winner because the prices have been so low. So it's just one of those things. So again, I just don't think Phillips 66 is a good buy right now. But let me take a quick look at. Let me just see how this low price stock that I just bought today was doing. Let's see, PFSW. No. Yeah. PFSW. Okay, let's look at that. Okay, there we go. PFSW. And it looks like, well, it's still holding its own. This is what I bought yesterday. This is a low cost stock. And it's basically kind of like a, poor man's Shopify. It's what I call it, but it's right in the buy zone. It's right in the buy zone. The buy zone is 833, and it's currently 833. So you might want to put this one on your list. I don't know if it's going to break out or not, but they had good numbers. Their revenues went up like about 1,000%. So they had some pretty good numbers, and I think that they may go higher. They're off of a cup without handle base. 96 is the relative strength. So this one is in my low-cost portfolio. And by the way, if you are interested in signing for low-cost portfolio, I'm putting it together, but it is available. And the best way to do it is to just go to DallasTradingFloor.com and just sign up. Just subscribe to the regular Action Trade Alerts, and then in the Ask a Question, if you could just indicate that you might be interested in the low cost portfolio. This is in the low cost portfolio right now. PSF Web. It's right at the buy point, and hopefully it'll go higher. I'm hoping it will. If it won't, it will be gone. But for right now, it is it's strong in there, and it's still the buy point. So hopefully. Pinterest, Pens. Thanks for writing in for about Pinterest. I like Pinterest, actually. I don't know if I like their chart though. It seems like we're weakening a little bit. Yeah, it's off a little bit. It just hasn't really formed a base. It's just too early to tell how this one is going to form out. There's no base formed. They just went through earnings. It's off after earnings. By the way, this is a real object lesson. Looking at this chart, just want to kind of, share this with you. When a stock is highly speculative as Pinterest is, and any stock really that's relatively new is like this. Basically, this is only a few months old in terms of being on the stock exchange. When it goes into earnings, it's best to sell it before earnings, then wait to see what happens, and then come back after. And the reason it's real simple, is that typically with these companies, even if they display really awesome numbers, they usually sell off after earnings. So typically to kind of get the bump, the best way is to go in and hold it right into earnings, and then sell it, and then possibly if it shows some strength and it's moving back up, then then go back and buy it. So you don't want to hold these, especially stocks like this, into earnings. It's just too difficult. JP Morgan, thank you very much from Alberta, Canada. Really nice place. Place I want to go and visit. Banff. Let's see. So JP Morgan, JPM, and that's probably the best of the abundant money center banks. It's okay. This is sort of a Warren Buffett type of stock, which he's very rich. He's richer than I am, that's for sure. And but it's, I just don't like the chart that much. The 40 day is below the 200 day, and it's in a banking sector. And yes, they did make some good earnings, but the bank's just kind of, it's just. I don't think you want to be there. It's yawn central. It just doesn't really work. Oh, hey, I do like this stock, AMT Applied Materials, and this, by the way, we're in a semiconductor super cycle, and I don't know if you've heard of Moore's law or not, but every about 18 months, they change they change the characterization of transistors in many of the integrated circuits, the chips, and of course they need more and better and newer equipment. And Applied Materials is one of the companies that makes a lot of this equipment. So it always does well when we're in a kind of an uptrend like this. So here we go with Applied Materials. It looks like we're right above a buy point. Oh, yes, we are. We're right in a buy zone. Okay. Oh, this is a tough one. Yeah, this is definitely buyable where it is right now at 63. It's at 64. This chart. This is a good chart. It's a cup. It's a cup with handle. So this is definitely buyable. I don't know how much higher this will go because I'm pretty familiar with this company, Applied Materials, and it tends not to be that dynamic. It tends to somewhere stick in the 60s and 70s. It just has for years, but I do think this is a good. It's definitely in a buy zone. Applied Materials is definitely in a buy zone, and it is a good company. So it is a very good company, and it does have we're in a equipment replacement cycle in the semiconductor manufacturing equipment space. So it's really good. The other companies that are sort of in this space are KLA and Lam Research. Those are the two other ones that are kind of in that area. There's other ones too, but smaller companies. But those three are kind of the biggies. Do you do calls and puts, or do you just buy and sell stocks? So, well, I do both. Actually, I have a bull call spread. I closed a bull call spread that I had on that I had on audio codes. It didn't work. It went sideways. It didn't, so I just closed it. But I do have right now a bull call spread on Lanier, which is doing really, really good. Actually, this is the home builder, and I do have a bull call spread on it, and I will show you the chart right away. And I don't think I know if I put this out on Action Trade Alerts, but this one has been doing very well, and I do think we're going to see some strength with the home builders, D.R. Horton, Lennar, those kind of firms, and we seem to be seeing it. And so I don't own the underlying stock on this one, just have a bull call spread on it, but it seems to be doing quite well. Lennar. And by the way, if you're interested, I do bull call, I do spreads, I do other options plays all the time. And what I do is I typically will put them out on Action Trade Alerts. I'll send out an Action Trade Alert if I look to be doing one of those. So in order to get that Action Trade Alert where I'll have the spread, the easiest way to do it is to go to Dallas Trading Floor and just subscribe to it. It's free, and hopefully you could profit from it. And if you're on TikTok, just go to my profile, hit the link, and you'll be taken right to the link to for the Action Trade Alerts, and of course it's free as well. And then we also are having something new, and then we're not quite there yet. I'm just putting the technical touches on it, and that's Jim's low cost, highly rated stock portfolio, which has some highly rated stocks that are under $10 typically when we start. So that's a pretty cool thing too. And a lot of people like that as well. And I'm getting all the bugs out of that. Still working on it, but there you go. Is it a good time to get into Wayfair? Well, W is definitely has a very good market share. But the thing is, I'm a little bit concerned. It's showing a little bit of weakness, but I think we may be a little bit too extended on it. The last buy point on Wayfair was basically back at almost the first of the year, about 92. It's now 308. So it's significantly above that, but it just seems to be climbing, and people really like this. I would not go into the stock. I just think it's too high right now, and it doesn't have a base. So I'd put it on a watch list. I'd watch this one closely, but I would not be a buyer of this one right now. I just think it's a little bit too risky. Just too risky. Oh, hey Thomas, sorry about that. Okay, I will see about getting you on the trailer. Sometimes, for some reason, sometimes it bounces, and I just don't know why. But I'm going to try to fix that. I'm still working with the mail server, so I will get you on the action trailer soon. But I really appreciate that. By the way, could you possibly, just as a favor to me, it just makes it so much easier for me because I'm kind of short-staffed around here. If you could go to www.DallasTradingFloor, and in the comment section, if you could just leave me a comment on that, that would be great. And where it says, ask a question, just leave me a comment there, and I'll definitely take care of it. And thank you for bringing that to my attention so much. I'm trying to get everything going so everybody gets these all the time. So appreciate it. Do you do calls or okay? Let's see. Oh, hello. Hey, how are you? I'm doing good. JMIA. Wow, JMIA. I don't know what that one is. Let me just look at that JMIA. See if I can give you a Jim. Huh. This looks like it just had. It has earnings in one day. All right. Here's the thing. This is kind of a cool chart. It looks like it's moving up very quickly, but it's moved down before earnings. Don't buy this thing into earnings, but wait to see how it trades when it opens up in about the first hour after it comes to life again. Now, they're going to have earnings tomorrow, and then so you want to look at it, basically, don't want to look at tomorrow. You want to look at it maybe early on Thursday to see how it trades. This is a typical IPO type of thing. It's in Germany. I just don't know what they do. Oh, e-commerce to Africa. Yeah, this is interesting. I wait until earnings on this one. Wait until earnings on this one to see. We definitely have a very good 50 days moved above the 200 day. That's good. We have extremely good relative strength at 98. So this could be very good. The only thing is it does look like it's selling off a little bit prior to earnings, but there was a big run up here in the last few days. So this is wait on this one. Don't go into this one prior to earnings. Wait for earnings and see how it does, because that way, that way it's less chance of getting burned. That's always the thing, not to get burned. Let's see. Made a call on Twitter earlier, hoping it pays off on Friday. Okay, well, I don't know about Twitter. Twitter is funny. I really think that of Jack Dorsey's company, I don't think Twitter's the one to own. To be honest with you, I think it's Square. I think Square is the money shot, rather than Twitter, because Twitter seems to be. Yeah, look at Square. Square is very, very nice. Let's look at the chart on Square. I really like Square as opposed to Twitter. I know that it's sort of off the cuff here, but the last buy point on Square was 82. It's trading at 138. Wow, it's really up. Not really in a base pattern, just kind of climbing the ladder there. That's an awful good thing. But if you're looking at Twitter versus Square, I think you want to be in Square, not in Twitter. Okay, what's your opinion of Nikola? Okay, here's my opinion of Nikola, and I'm not trying to berate anybody, but I just don't think this is. Now, I am not adverse to low price, high quality stocks. I may have a portfolio of them. And by the way, if you're interested, you can just you can go to Dallas Trading Floor and just indicate your interest and ask a question, and I can get you get you set up with that. But here's the problem with Nikola. Nikola is a Me Too company, and yes, they might. I mean, hydrogen might be big one day, but it's the hydrogen car is just kind of like I'm kind of old. Well, I'm older than I used to be. That's obvious, isn't it? They've been talking about this thing literally for 35 years. but it hasn't borne any fruit. Electric cars seem to be working. I think electric cars are the way forward, not hydrogen cell cars. Now, it sounds cool. It sounds totally Jetsons, but I just don't think Nikola is going to make it. They can't make the vehicles. Now, there is a company that you've probably heard of that is very cheap that may be able to make them, and actually well, and that is Ford. And I want to show you the chart on Ford. This is probably worth going into a low-cost portfolio. Why? Because it just broke above the 200-day average, and it's in a buy zone. Hooray! It's in a buy zone. It just broke above the 200-day. I think Ford may be the play in electric vehicles if you can't get into Tesla, because they actually can make the vehicles, and they do have good technology. Is it as good as Tesla? No, it's not. But they're getting better, and they can probably make a very, very good medium-duty electric truck. And they definitely have a marketing network, and they can definitely sell them. And they have a lot of cash in the bank. They're not like GM or Chrysler, which are both in trouble. Well, they're not really in trouble, but they have problems. Ford, on the other hand, has a pretty good book, even though their stock is horrible. Now, here's the problem with Ford. Ford has been losing money. Surprise, surprise. Hopefully they can turn that around, but probably not in the next few quarters. What I think is going to happen with Ford is I do think that they are going to be a competitor in this electric vehicle space. I really do. And so, this one, definitely watch list Ford. I do believe, even though I normally never suggest a downward trending chart, and this is a downward trending chart, I do think that here I am breaking my rules, but we do have a cup, and we don't have a cup with a handle, but we do have a cup, and we have it moving through the 200-day moving average. If this continues with Ford, I think that we might see the 50-day cross the 200-day. When that happens, it's game on. So this is definitely a watch list, and you might want to consider possibly putting a toe in, maybe a half or a quarter position on Ford, because I do think Ford, amongst the real automobile manufacturers, unlike Nikola, has a chance to be bigger in the electrical vehicle space, and that's going to define a lot of companies. Tuesday greetings. Yeah, thank you, man. Thanks for that. Okay, so Ultra Beauty, ULTA. I think this is Ultra Beauty, ULTA. Let me see. ULTA. By the way, Ultra Beauty. Oh yeah, Ultra Beauty. This is an interesting company. It's definitely not trending in the right direction. This is a local company for us here in Dallas. It's based up in Denton, Texas, and they're all over the place. They're even in Europe. It's amazing. But it seems like this is trying to make headway. But the problem with Ultra Beauty is they are a retailer, and this COVID thing is just, it's tough. The one thing is they're in a very good space, though, in retail, because, even if people are cutting back on a lot of other things, they do like to look good, and so they definitely have a lot of good products, and people really, really like the stores. So that's a good thing. But I just can't recommend this stock right now. It just is not a good enough chart to buy, and it's quite expensive, $216. So I think there's better places to spend your money than this. I think that, and I'm going to try to put this together with the low-cost portfolio. So some that are just a little bit better than this, than Ultra Beauty. But, there you go. Okay, Walmart. Walmart is, oh, hey, by the way, I don't know if you have this in your area, and they don't actually have this in where I'm in, but Walmarts are starting to set up outdoor movies, like drive-in movies in their parking lots. It's kind of cool, actually. So I may be going to one of those pretty soon. You never know. Anyways, this is the chart for Walmart, and we're definitely in a buy zone with Walmart. Ouch! This is very good. Yeah, this is a winner. Okay, we have. Yeah, it's definitely in the south end of the buy zone. The buy zone is basically about 131. So we're at 130. So we're right at the buy zone. That is very, very good. This is a good chart, and it probably is going to go higher. So if you're looking for a long-term thing, don't go in before earnings. We're earnings in 7 days on Walmart, 7 days on Walmart. So I think that this is very worthwhile getting into because this COVID thing is going to go longer. And of course, you know, grocery stores are the new restaurants. So restaurants are doing horribly, but grocery stores are doing great. So Walmart looks good, but don't buy it for about 8 days. Wait for it to go through earnings. And I think you might have a winner here. This is a tremendous company, of course. Yeah, everybody knows about Walmart, and I shop there too. So it's a great store, and it's going to be one of the last survivors in the retail space. And I definitely think that it looks good. It's set up very well. The buy point on Walmart about 130, 131 is about the buy point. And remember, when you're going into a position, try to look to buy at a buy point. The reason is because typically the way stocks move is that they don't move up or straight down. They kind of stop at these little way stations called bases. And it looks as if Walmart has a base at about 130, 131. So that's a good place to enter the stock if you're not in it. And don't enter all at once. Don't, if you have, typically if you have a $10,000 portfolio, here's what you do. Here's how you enter it. You take that $10,000, you divide it by 8, and that's going to give you $1,250 basically for each position. Okay. With Walmart, you don't probably want to go in with any more than a half position. So you're going to look to see about what $625 worth will buy you in Walmart stock. And that's a half position. I would go into a half position basically, basically after in about 8 days. That might be a really good thing to do. Here's the thing. You don't have to buy 100 or 200 or 300 shares. You just buy one half position. And then if it does well, you buy another position. Another half position. So that's really how you do it. You take the value of your portfolio, and in my low cost portfolio, the value when I started with it was only $6,000. It was a little less than $6,000, and so you just divide that by 8, and that gives you full positions. And typically, when you're going into a new stock like this, off of a very good base like this, you want to go in with a half position. If it does well in the next few days, then you might want to up it to a full position, and then if it does really well, then 2 positions. But you don't go in all at once with all guns blazing because it may move against you. So you want to go in with a good base, half position. If it moves very well, then you full position, then possibly 2 positions. So that's how it goes. Now with Walmart, we're looking basically for it's going to have earnings in about 7 days. You don't want to go in before earnings because there can be some earnings surprises. Even if they do extremely well, sometimes there's a big sell-off because the old adage is sort of true, and that is buy on rumor, sell on news. And, when the earnings come out, even if they're really good, there is a sell on news. So it typically will dip a little bit after. Not always, but it's just not worth holding it through earnings. Wait until the day after and see how it's trading. And typically, a lot of times, it'll flush out the people that were in it for the options. And then going forward, you're gonna have it on an uptick. Always remember to buy on an uptick. That's another thing. It's very, very important. Try to buy an uptick and try to buy an upward trending chart. And that's definitely what we've got here with Walmart. So really good advice. Really good chart on Walmart. Okay, Lowe's, L-O-W. I think that's Lowe's. Yeah, L-O-W. Let's see. Oh, okay, Lowe's. Yeah. Look at that chart. Very nice. Very nice. Well, certainly these stay-at-home stocks are doing well, and this is definitely in the category. Lowe's and Home Depot. Lowe's has moved up very, very nicely. It's a good chart. This is a buyable chart. I'd be a little bit careful. We've pretty far extended from the buy point, and the buy point basically on this one was 102, so we're 153. So we're fairly extended from this. I just don't know. We have earnings basically in 8 days? Yeah. So this is not even viable at this point. We've got to wait at least 8 days and see how it's doing. See how it's doing. Remember, don't buy on a down tick. Try to buy an uptick because that will help many, many times. XLF. Oh, this is Spider. The XLF is Okay, so this is interesting. Okay, so this is the financial Spider Select, yeah, it keeps going up. It's below the buy point. Okay, this is not too exciting here. This the financial spider. There is a cup, and the buy point on this one is 26. It's at 25, so it's pretty close to the buy point. I wouldn't buy this thing until it moved above the 200-day moving average. I still don't like this chart all that much, and I don't like the financial sector in general. It's only got a relative strength of 35. For an ETF like this, it should be at least 50, because you want to be better than the S&P 500, or else why do it? So I think that I can't recommend the XLF. I mean, you're not going to lose your money in it, I don't think, because the government will come in and back the banks. But I don't think you want to be there. There are better places for your money to go. All right, is the overall market now correcting downward? Well, I think it is settling. I definitely saw that today, because I was stopped out of my position in Tesla, and that's been rolling for a while. And so I was down 7% in my position. So I was out of my position. I do think we are settling a little bit. We will see. We may be getting pretty close to the top of the cycle. There's going to be a lot of maneuvering here that we're getting close into where the election is going to be. And I think that the reopening has been not as exciting as everybody thought it was going to be. It's a little bit disappointing. So I do think that there's going to be a little bit of pullback in the market. But some of the stocks, that the standstill stocks, seem to be doing well. Today I bought a position in Facebook and in Apple. So that's where I've been putting my money. Now we'll see. They pulled back. I mean, I bought on the uptick and they pulled back a little bit. So we'll see if I was right. But I do think we are settling down. I think you're going to have to get a little bit more conservative. I don't necessarily, at least that's kind of the general feeling that I get, maybe towards the end of the summer. Typically this season, going into the dog days of summer, and we are definitely there, this is the time when there is a pullback in the general market, just anecdotally. So it really, until school reopens in September. Now here's the thing, school's not really going to reopen again in September in many places in this country because of the COVID thing. But there definitely is a kind of a pullback in summer. So we kind of want to look to be really, really selective right now, and maybe pull back from, if we were using margin or anything like that. So we want to kind of pull back a little bit, but I still think there's opportunities out there, and it's kind of where I'm at. Wow, it is almost an hour. Thank you, everybody. I think there's a few people watching today, actually. That's really good. And hopefully there's a bunch of people on TikTok as well. If you want to sign up for the trade alerts, super easy to do. Just go to dallastradingfloor.com and just put the information in there, and you'll be right on the list. And I'm going to have the action trade alerts links for that available pretty shortly. I'm still working through some bugs, but hopefully I will get all that done. So for everybody out there, thank you so very much for taking all the time to take a look at Dallas Trading Floor. And I will be back tomorrow at about the same time. So we have one last question. Thought on WFC. Just confirm for the list. Thank you very much for confirming. I so appreciate it. Thank you. Hey man, that's really great. I'm going to try to get out a good trade alert, and that helps me. When I'm doing it, is I'll put it in a trade alert. It makes it a lot easier to follow. Rather than just me talking head on the screen. So you can hopefully follow along with that. Thoughts on KLR. Let me just see if I can give something for KLR. Oh, no. You don't want to buy this one. This is not a chart that you want to buy. I'll show this to everyone on the screen. And by the way, if you are looking on TikTok, it's super easy to see the charts. Basically, they're on Facebook. And by the way, everything's archived on Facebook. So if you want to go back later on and just kind of skip through the stuff to see the charts, they're on Facebook. It's at facebook.com/Dallas Trading Floor. This is not a chart that you want to buy. It's below the 200-day, and the 50-day is below that. It's got a relative strength of 9. This is not a chart you want to be in. Unfortunately, this is not a stock. So if you have this thing, you might want to consider selling it. And if you're looking to get in, I'd kind of stay away. it just doesn't. It just doesn't really look that good. For long term. Well, here's the thing. Famous saying, and this is why you need to be very, very disciplined on your stock purchases. If the thing goes down more than 8%, get rid of it, because in the long term we're all dead. And here's the thing: you don't want to lose your capital. I make mistakes all the time entering stocks, but I try to stack the deck in my favor. And one of the things I do, I try to only buy an uptick. I try to only buy on a chart that's moving in the upward direction. I also try to buy on a base, which helps me downside protection. And then even with all that done, I still set a stop loss. So don't take don't take short-term losses and turn them into long-term pain, because it's better to quickly move out of an issue if it's down more than 8%, but you can do this by setting stop losses and just be religious about this. You will maintain your capital so that you can come fight again. There's always a good stock available out there. You just have to find it. And so that's the thing. Don't let short-term losses turn into long-term losses. And that's why you always want to set the stop loss. Happy trading, everybody. I hope that you'll consider taking a look at the Action Trade Alerts by signing up at Dallas Trading Floor. And if you're on TikTok, just go to my link on my bio and just hit that, and you're right there. Thanks again, and I will see you tomorrow. I'll be on at 2:30, so I will be back hopefully, and hopefully we'll have an up market tomorrow. But today's a little bit down, and I will see you tomorrow. Again, thanks for taking a look.